A very warm welcome to you as you join us on today's episode of Tax Matters. If you run a financial institution, a bank, an insurance firm, a stockbroking firm, by now you must have filed or you're about to file returns on the worldwide income of your customers under the Common Reporting Standards of the Automatic Exchange of Information. The Aeoi-CRS portal of the FRS went live on September 1st, 2020 and will remain active till September 30th. It is an epochal event which has continued to generate ripples across the financial sector. You will recall that in the build-up to the epochal event, we brought you interviews with two of the drivers of the AEOI project at the FRS to get a sense of the workings of the scheme. The CITN has also weighed in on the matter, contributing its own quota to the enlightenment effort by holding a seminar on the AEOI. Let us begin by refreshing your memory. What is AEOI?
First of all, you will understand that the business world today is not what we used to have. Now you find out that the business world is dominated by what we call multinational enterprises. That is a company that will be present in several countries. And that is what you see, because just like they will say that the world is becoming, the whole globe is becoming a global village. And because of that, multinational enterprises are able to locate businesses across jurisdictions. And they also transact businesses with one another. And documents kept in one country are not visible to another country. And when you request for this document, sometimes it takes ages before the companies will be able to provide them. But we know that this information or these pieces of information are routinely provided to tax authorities across the world. So it is therefore easy for FRS, for example, to speak with HMRS in UK and say, look, there's this company in Nigeria. We also know it's in UK. Can you give us this information? Most often they already have the information within them. And where they don't have it, they also have the law to mandate that entity to go and bring that information, and then which they can pass to Nigeria. So to make administration easy, to make the business of tax transparent, so that everybody can see it, there's nothing to hide there anymore. These are the major compelling reasons for countries, tax authorities in different countries to come together and work together and share information. But one thing you must understand, that the business of tax rides on information. So if there's no information, there's nothing the taxman can do.
Before now, inquiries about taxpayers on their activities, particularly those that has to do with illicit movement of funds, taxable revenue, or other revenues that are known to the tax authorities out of Nigeria, has always been on a request basis. The Global Tax Administration Forum decided to say, let's move to certain level or the next level, or do things differently from the way it used to be done. Before now, if you are investigating a body corporate, or if you have put a searchlight on an individual, you have to do a letter to countries like United States of America to make some specific inquiry or to request for specific information on that particular individual or that particular body corporate. It then became clear that that was not yielding the needed result. Why was it not? Has it not been yielding the needed result? Is that the same person or the body corporate that you are putting a searchlight on may have done one business or the other, or may have illegally moved funds from Nigeria to countries other than United States of America. What that implies that that same person may have done certain transactions in the UK, may have gone to a tax haven where tax payment is just a mere supplement like it is in Nigeria before now. So if you deploy technology, or if you come up with a framework where you automatically exchange information, what that implies is that when you put a searchlight on an individual and you type his name, maybe through the robust infrastructure that has been deployed, wherever he has an interest in terms of investment, in terms of transaction globally, you will have direct access to it. So what the global tax forum decided to do is that let's come up with a platform or an opportunity that will give us the needed information we need about a taxpayer, about a body corporate, about an individual that had moved fund from one country to the other, from an entity to another entity, from a region within a continent to another region, or from a state to another state within a country. What the Global Tax Forum has done was to now get a platform where we are going to get information seamlessly for purpose of assessing, for purpose of collecting and accounting for taxation in the respective countries all over the world.
London, New York or Lagos, business or holiday, home or office, you can now carry out your tax transactions from anywhere in the world. You can now file all your tax returns, pay online, get a receipt and even process your tax clearance certificate from anywhere in the world online and in real time. All you need to do is log on to www.firs.gov.ng and click on e-services and be introduced to the world of innovation, convenience and transparency from the FIRS. You can also pay stamp duty as you register a new company with the CAC, or for other transactions that require stamp duty payment online. You can also file your withholding tax returns and determine the withholding tax deducted from you is in government coffers so that you can get your receipt within 45 days as long as the deduction has been remitted. Yes, all of this and more online at www.firs.gov.ng/e-services. FIRS, making tax administration as easy as ABC. Please note that all FIRS services are free of charge. This message is from the Federal Inland Revenue Service. It pays to pay your tax.
Mr. Matthew Bojambola, the Director Tax Policy at the FIRS, is one of the drivers of the AEOI project. He is a representative of Nigeria at the OECD Global Forum. Mr. Bojambola presented the lead paper at a webinar organized on the AEOI CRS by the CITN on Thursday, the 10th of September 2020.
The relevant information must be reported every year. So that is what we see under the due diligence requirement. And then there's a reporting requirement for the FIs. And that involves reporting relevant information that's flowing from the due diligence that has been done. For 2019, for example, all accounts must be reported by 30th of September this year. Subsequently, all accounts, reportable accounts, must be reported not later than 31st of May going forward. Where an FI does not have reportable account, it still must file a nil return to say, look, I don't have anything to declare. And reports or returns are submitted electronically, so there are no human physical intervention. And then the third requirement for FIs under the CRS is to keep record. And this is very, very important. for example, to keep and obtain or create relevant records. This is very important. It's a major aspect of the CRS. And then to also keep records of the steps undertaken or evidence that has been relied upon. So for example, in classifying that an account is reportable or non-reportable, you must keep record of what steps you have undertaken and what kind of evidence you have relied upon. And now let's quickly look at the reporting timelines and for the respective account types. We are still looking at the 2019, which is the first year of reporting. So for pre-existing accounts, for all entities, they will be reported by 31st of May 2021. So which means that all accounts of entities that banks, brokers, and whatever have opened before 1st of July, before July 2019, when the regulation was published, they will be reported next year, May. Now, with respect to individuals, if the account is classified as low value, then again, such accounts will be reported by 31st of May 2021, next year. However, for individuals classified as high value, they will be reportable this year by the end of this month, not later than the end of this month, 30th of September this year. Now, for new accounts, whether entities or individuals, all new accounts are reportable this year. This is very, very important. All new accounts, that's all accounts opened after the publication of the CRS regulation, are reportable not later than the end of this month. So the only category of accounts that will be delayed till next year are the existing accounts of entities and existing accounts of individuals with low value. And what is low value had been defined in the guidelines that FRS had published.
Participants at the webinar raised some concerns, especially with regard to financial institutions reporting on the worldwide income of their customers.
There was little or no time given to financial institutions to understand the regulation, to sensitize the staff, to sensitize its customers. When given enough time to even design the self-certification forms, I think the second major issue we are currently having as financial institution challenges is the common reporting standard requires financial institutions, like I've mentioned earlier, to ensure customers fill self-certification form. So meaning from 1st of July 2019, all customers of financial institutions are expected to fill a self-certification form. What are the contents of the self-certification form? The self-certification form is just a mirror of the current account opening package banks have. Before you open an account in a bank, you have an account opening package, which we are all familiar with. So the FRS has come up with another form, which is saying all customers that open a new account must fill this form. Our customers have told us, I cannot fill this form. It's a duplication of effort. Some customers have even told us they have confidentiality issue. They do not think giving this information to revenue authorities would protect their interests. We are worried because if customers do not fill the form, it's one of the basic requirements for a bank, documentation requirement. You have to make sure your customers fill the form. If your customers do not fill this form, you stand to pay penalty and interest, very steep penalty. So what do we have to do? Like I said, we are left with the option of, do we place customer accounts on PND? There's a terminology we call PND, which is place no debit. Once that is done on your account, you cannot withdraw from your account. So it's a tough call the bank needs to make. The decision between compliance and loss of customer. That's taking us to the question of the scope and the approach to this. Do we make all customers fill this form, or we should just restrict this to customers that are reportable, that financial institutions have identified as reportable? Another question we're asking is, does the regulation allow us to merge our account opening package with the Common Reporting Standard form? Like I said, the Common Reporting Standard form is an additional form that is similar to our current account opening package.
How can the FRS assure that compliance with the FCCP customer protection guidelines? Because we talk about secrecy, confidentiality. These are concerns for the taxpayers.
The issue of challenges posed by dual citizenship was raised. The issue of duplication of information, particularly when you have information in a bank and maybe a custodial institution, and you have it in other financial institutions. And then the complex nature of the platform, the FRS platform, where, filing to be done on jurisdiction by jurisdiction basis. Can't we just file and then the system will sieve this information and make it available to the respective information? Again, we have the issue of each account of individual has to be filed separately. For example, filing tax of an individual with 10 financial accounts offshore, we mean that you have to file it 10 times. What are we doing to reduce some of these issues with the platform? That are we going to give time for people to understand and be able to file their returns? Okay, that the 30th of September deadline, we hope that it will be extended. And again, a lot of issues has been raised concerning the penalty regime of 10 million all over the place. That can we be mellowed down on that and also focus majorly on ensuring compliance?
In terms of the CRS portal itself and the kind of information it takes, under the CRS guidelines, when you report on your customers' information, it's not just the account balance you should report. You should report on the type of payment that came in, like you mentioned in your presentation, interest, dividend, and the value of that. But for those who do manual submission on your portal, there's no provision for you to report on the payment type and on the value of that payment. All you can report on is on the account balance. Last but not the least, is in terms of, like you said, all banks should report on their customers, but there are categories of banks that say that based on their nature, they're not likely to have this because, for instance, microfinance banks, they only cater for the poor and the low-income earners. And there are over 900 microfinance banks in Nigeria, far more than even the commercial banks and the others. Many of them are not even aware of these things. So if you then go ahead, I can assure you by 30th of September, there will still be some of them that they haven't reported, or a number of those guys, and imposing 10 million penalty on them when they actually don't even have reporting to do is quite tedious. So it's to look at for categories of financial institutions who by the nature of their customers will not have reporting to do, how they can be excluded from these provisions, even if not for September, before the next reporting timeline.
Mr. Bojambola responded.
With respect to the portal or the software being cumbersome, let me explain that that is the global software that is being used. So it's not only in Nigeria that software is being used. The software we are using was what was recommended by the Global Forum, and the service provider was also equally recommended by the Global Forum. In the whole world, there are only 2 service providers providing the software, the CRS, only 2 of them, and so we use one of them. Nick raised a number of issues. Let me make it clear there is no manual filing of returns with respect to the CRS. All reports have to be done on the CRS portal. Number 2, I have noted your point that there was no feed for value of assets. We will communicate this again back to the Global Forum. On the issues of microfinance institutions, I have noted your point, but again, what we have in the regulation essentially is the global standard that does not exclude microfinance institutions. but we'll have to look internally and also in collaboration with the Global Forum Secretariat, how do we deal with such entities that the risk of them having reportable accounts are very low. And if you remember that in one of the slides, we said that some institutions, even though they are financial institutions, they actually be exempt. So we would need to explore that. But for this year, we will not be able to do that.
Just as we were about to put this episode to bed, information hit the public space about the directive of the federal government that all bank account holders have to re-register. For clarification on this, we spoke to Mr. Bojambola. So we have in our possession a public notice on completion of self-certification forms by reportable persons. Who and who are you talking about here?
Reportable accounts refer to accounts held by individuals or entities in a financial institutions by persons who are not tax residents in Nigeria. And when we talk about persons who are not tax residents in Nigeria, we are talking of persons who are ordinarily not liable to tax in Nigeria. And that will mean persons who are not living in Nigeria or working in Nigeria or engaged in any economic activity in Nigeria.
How are financial institutions expected to sift reportable persons from non-reportable persons?
Financial institutions open accounts for everyone who approaches them for the purposes of maintaining an account. And there are due diligence that are required based on the regulatory authorities, and pieces of information that are relevant are acquired at that point. However, for the purposes of the common reporting standard, that's the automatic exchange of information, as at the time that most account holders were opening their accounts, they did not indicate the country in which they are ordinarily resident for tax purposes. And so for those who are just going to be opening accounts now, the financial institutions will be requesting them to provide the information that will enable the bank identify where they are ordinarily taxable and see whether they are reportable accounts or not. For existing accounts, that is, accounts that had been opened before the coming into effect of the common reporting standard regulations, the institutions, the financial institutions must administer a self-certification form wherein the account holder will indicate to the relevant institution that this is the country in which that person, could it be an individual or a company or any other institution, is ordinarily resident for tax purposes. So in answering your question in summary, the banks will need to administer the self-certification form to the existing customer with a view to getting the specific information as to where that customer is taxable. Is it in Nigeria or in a country other than Nigeria? And then from there, those who are ordinarily taxable outside Nigeria will form the reportable account, which will form the information that Nigeria will exchange with its treaty partners.
So we are to take it from you that this has to do with all account holders.
Now, the exchange of information under the CRS is not for all account holders. It is only for persons who are not taxable ordinarily in Nigeria. However, in order to get that information, then the bank may administer the certification form to all its customers so that it will enable it to identify out of its pool of customers who will fall into the reportable account.
They say the goldfish has no hiding place. There is no more hiding place for the tax dodger. What you do in Lagos at the touch of a button can be monitored in Washington. What you do in Mina at the touch of a button can be monitored in China. Remember, the cost of non-compliance is much more higher than the cost of voluntary compliance. See you next week as we bring you more education and enlightenment on tax issues.